Hello everyone, this is Jordan. This video is being recorded on the evening of Wednesday, April 10th, 2024. Thank you so much for tuning in. In this video, just going to look at gold against my 60-40 portfolio, total return indicator, and also gold against the stock market. Going to analyze that for a few minutes here. And before we get started, I'd like to thank everybody for subscribing to my channel. Those of you who have not done so yet, please subscribe. I love to be able to get up to 10,000 subscribers. We're so close. Thank you. Now, let's get into the video. Okay, so just one chart today. I'm going to talk about this for 5 minutes or so. Hopefully I won't drone on more than that. But this is monthly data, so this is gold. This is gold against the 60-40. This is gold against the stock market, gold against the S&P 500. And over the weekend, I obtained some new data for total returns for bonds. And so I recalculated my 60-40, tweaked it a little bit. I think this is better data than what I was using. And so this chart there's a little bit of a difference in this chart compared to what I've been using previously. And the difference is this right here. We're actually, if we can break out here and we're like 2 or 3%, really like 1% away. But I mean, if we get like a 3% pop here, to me, that's confirmation of a new secular bull market in gold and in precious metals. And people, we've talked about this in so many videos. When you're in a secular bull market, like this here and this here, for gold, gold is outperforming everything. Outperforming the 60-40 here, outperforming it there, crushing the stock market, crushing the stock market. So that's a secular bull market. And so this action here, until this breakout, look, it wasn't outperforming the stock market. You had a lower low here, lower low here. It wasn't outperforming the 60-40. But with the breakout of this super bullish cup and handle pattern, this super bullish 13-year pattern, with that breakout, it's bringing us quite a bit closer to confirmation of a new secular bull market. I mean, even this by itself, it's really hard to argue that we're not yet in a secular bull. But I'd really like to see a move higher in this and this as well. A nice pop here like that. That to me would offer strong confirmation. And so let me go back and review a bit of history here. And now first the 60-40. I apologize if you don't understand, but the 60-40 is 60% stocks and 40% bonds. So that is the conventional investment portfolio, which mainstream financial professionals have adhered to for decades and decades. So I apologize for not saying that at the start. So we're looking at gold against basically the conventional investment portfolio. And so this secular bull market here, I believe around here, why is this gold against the S&P stronger than the 60-40? Well, because the S&P had a bear market here, and I think bonds, you probably had a decent gain in bonds. So that explains why you have this lower low here, but this higher low against gold against the stock market. Now, ultimately, gold bottomed here, started to move up. And even after, you go to late 71 when we went off the gold standard. It wasn't until 72 when we really started to ramp up here in gold. And we can see that here. This is a 40-month moving average, by the way. So you had the bottom in the gold 60-40 in 71, but really this pop here in 72, that to me was confirmation. Went above the moving average, then you had the big pop, multi-year. You're getting to a multi-year high. So that was strong confirmation. Now you go to here, the beginning of this secular bull. And so I drew this trend, this red trend line here. And so you had the double bottom in gold. So you had the 99 bottom, 2001 bottom here. I marked the first line here was the nominal bottom, just like I did here. It's a nominal bottom. Second is a confirmation. So nominal bottom here in the spring of 2001. You didn't get the confirmation until 2002. And so you can see here, I drew this red resistance line where gold against the 60-40 went up in 2001. Then it had this little pullback, but boom. Once you got into 2002, similar to 72, you had this strong move higher. And so that to me was confirmation. Also moving above the 40-month moving average, just like it did here. So again, you can see the confirmation in both cases, roughly a year, 9 months, something like that, after the nominal low. Now, again, the stock market was much stronger here than the 60-40. I mean, it bottomed, it started to move up well before this signal, and that's because bonds were in a secular bull market. So this secular bull in gold occurred while there was a secular bear in the stock market, but there was still a secular bull in bonds. Now, one reason why this was so strong, from 35 up to 800, $35 an ounce to $800 an ounce, you had a secular bear in bonds and the stock market at the same time. Bonds and stocks both in a secular bear. Now, the secular bear in bonds broke in 65. Secular bear in stocks ended in 68. Now, we know that the secular bear in bonds has already broke. Now, look, bonds can rally for a year or so. It doesn't mean it's going to go down for 20 years. But, I mean, you get the point. It's in a secular bear now. It's turned. But the stock market hasn't yet. So that is what is really holding gold back from breaking out against the 60-40. And so that, to me, is the key with where we are right now. Maybe this is just such a bullish setup in gold that this is going to go to 25, 27, 2,800 this year. And it doesn't matter. We're still going to get confirmation here, maybe without the stock market cracking. But if we get the stock market cracking in the next year or two, that to me is that gives us, or gives gold rather, the real runway to 3, 4, 5, 6,000 over the next 2 to 3 years. That's what's really going to drive it. And so the summary of this video, we're getting really close. I mean, when the 60-40 breaks above this line and does so convincingly and with some gusto like it did here in 2002 and 72, the 40-month is also here. So, you get that strong move like that. That, to me, is confirmation. We're getting really close to that point. So maybe when gold goes to 2,500, we'll be there. But we're really approaching that point. We're getting really close. So that's all for this video. Thank you so much for tuning in. Let me know what you guys think. Leave a comment. And hey, consider subscribing to my newsletter. Go to thedailygold.com/premium. Would love to have you. Gold's broken out. Silver's broken above 26, but we're still early in this thing. I mean, this could be huge over the next 2 or 3 years. Now is the time to get in, or at least get ready to get in and buy any weakness. That's enough for me. Thank you for tuning in. See you guys again in the next video.